Hi folks, it's Aiden CryptoBurb speaking. Welcome to today's Friday webinar. Well, we have just seen a significant drop overnight for Bitcoin that actually nuked about 5% and it's staying below the critical $23,000 support, right? Well, we're going to talk about what is happening around the Asia session and why it actually often nukes at that time and what is potentially ahead as we're heading into a brand new month full of opportunities. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. Hey everybody, welcome. This is Adrian CryptoBurb speaking. Well, I can see some people logging into the chat. We're really awesome to see. Hello from Chile. Hello to the Koneku. Also hello to Steven Seedhouse from Wales. I've got tons of reputation, respect for Wales. Welsh people are pretty magnificent. Same goes to the Chile. So welcome to the show. Hello, Dom. Hello from a non-bull market like everyone claims to be at. That's interesting that people always make those notes right after Bitcoin drops and not when it pumps. That's also, pretty significant and popular. And there you go, there's Siron, my good friend who was a lucky winner actually to go and travel to London to the Blockchain Economy Conference in London, which was pretty magnificent, extraordinary environment. And it was pretty amazing to meet so many incredible people, so many beautiful people who really wanted to learn so much. And well, believe it or not, but 5% drop wouldn't frighten those people out of the market, right? And those who show this persistence is, well, they are going to make it. Welcome, Sarah, and welcome, Leanne, as well. Hello from the UK. Good to see you. Good to see you again as well. YTT80, that's what I think is the name. Hello, Burp. How are you? I'm really great. I'm really smiling a lot, seeing all of this amazing, beautiful vibe. Let me know, guys, where you're writing from, how you guys are doing. Because, well, the market has been picking up slightly over the course of the past 3 months, right? We actually have seen this positive market rotation. And before we go and discuss, this tiny little drop that we've seen, in an overall 65% move up, right? Well, we're going to discuss also other intermarket correlations, other intermarket technical analysis aspects that, well, just contribute to the fact that the markets do not trade in vacuum, yet they are interdependent, they are correlated, they are, cross-dependent, and what happens in one market is going to also balance out and influence, impact what's going on the other side of the market. Well, let's kick off with something that is a fresh news, fresh off the oven. This is a partnership announcement. It's not on Twitter just yet. It's going to be posted on Twitter right after I finish the show. Now, this is a partnership announcement, and this is me welcoming with great respect a very excellent project and very excellent founders of Rebase. And the Bourbonist, my beautiful firm, has partnered up with Rebase. This is an excellent project and definitely the one that is going to be lots of buzz, lots of crazy hype about. That's what our due diligence shows, right? And tons of very valuable GameFi experience is going to be given, as those legends, they are creating some excellent app. If you remember, Pokemon Go, right? That was so hot topic at one point. Then these guys are way better than Pokemon Go. They are providing multifunctional GameFi experience with geofencing, and I've seen their app. It's pretty magnificent, and by just experiencing and utilizing this app, you can actually earn money and claim certain benefits. So that's pretty cool, and it's really original. It's nothing like we've seen ever before. So it's an extremely welcome and kind of welcome to the Bourbonist family. Congratulations to our partners at Rebase. And short, we're going to follow up with certain public announcements everywhere we can, starting with this YouTube show. So now off to the market analysis. Let's have a look what is going on. For some of you who might have missed, I had recently visited for the first time ever the show of Dave Keller, which is called The Final Bar. Dave Keller is an extremely reputable CMT chart and market technician who runs and is a chief market strategist at stocktraders.com, an excellent, marvelous platform for traders like myself, like yourselves. And this is the exactly one that I'm using. Right, full disclosure, we are not in partnership. This is just me kind of like appreciating their excellent tools on the daily basis that I use. What we can tell and spot in this daily chart of the Dow Jones Industrial Average is we can tell that there has been some directional alignment between both averages. We are talking about the Dow Jones Industrials as well as Dow Jones Transportational Average. Dow Jones Transportation is a little bit of more discretionary, right? It means that it trades upon the trader's discretion. Discretion, which basically means that you have to, as a trader, as a consumer, you do have to decide, what your money should be spendable on, if you know what I mean, right? Not necessarily every single day you could or you should or you want to afford to buy some durable goods or cars, right? Or some very significant kind of like purchases. Just maybe at times you want to play it safe, right? Which has definitely a lot of reflection in the consumer sentiment, right? And as we are facing the risks of recession, which are not out of the woods, which are not evaded just yet in any way, it's good to see that there is some picking up interest on those consumer discretionary kind of like assets, just like Tesla, for instance, right? Tesla is definitely a big contributor to the Dow Jones Industrials. However, what's relevant is that we're looking at a significant push and bounce back of the 200-day moving average support, which is basically, what the true beauty of technical analysis really proves about, right? So we're even since breaking above the 200-day moving average, which represents this primary bull market trend, this definitely had stayed, above it, right? This is a sign of strength. Look at how much time we had spent above this 200-day moving average, which used to be nothing but a proof of weakness before, right? For the entirety of the time, the direction of the 200-day curve was declining. Right now, we've flattened out, so the trend has shifted. The bear market is not the bear market anymore. We are not moving down on a primary trend basis. And on top of that, we're looking at the significant push rotation to the upside and rolling over 200-day moving average breakout, and which is consistent, which is definitely not an accidental situation, right? We are talking about a confirmed, verified breakout that it just remains and persists above the critical resistance level. So this is somewhat bullish, right? And the fact that both averages are moving in the same direction is so-called confirmation based on the Dow theory, right? So Dow theory basically tells you that when the market is safe, when there is little expectation for some sort of like a reversals, some ongoing regime changes or shifts, rotations to the market. So you won't see those until you see disproportionate or different diverse movement divergent between the two averages, right? Just like we had this massive breakout at the Dow Jones Transportation, and we kind of like did not manage to climb as high on the breakout note for the Dow Jones Industrial. So this disparity is often a source of local uncertainty, and the fact that those markets are not moving in with the same pace, right? And this means that there's leadership, there's laggardship, and whichever is stronger, of course, is a better bet on average. If we go there to move on to S&P 500, so ever since the peak, which is on the left hand side up there at around what it was like 4,800, we definitely had seen a long journey to the downside, followed by a significant drawdown, right, towards 3,500 for the S&P 500. We're looking also at this credible pullback. First of all, the broken highs, setting new higher high, right, bottoming out in October, setting new high up here, for 4,100, which was basically aligned with this previous area of weakness. A little bit of pullback. It is very rare and infrequent that when there is a price pressure and meeting the facing the price barrier, there's a lot of order aggregation, there's a lot of order clustering, as people believe that just because it showed weakness in the past, it's going to show weakness exactly the same place, which is why they would ask for lower prices to sell off their positions to maybe take profits, right? It is a little bit counterintuitive when you think about that. It's something that we call otherwise is a loss aversion bias, which is an emotional trigger pushing us to irrational steps, because otherwise, those trends are more likely to persist eventually, right? So setting those kind of like early orders to sell off to exit the position is counterintuitive, like I say, or counter the practical financial tips, because by making money, or in order to make money trading, you have to long the winners and cut the losers, not the other way around. You don't want to cut and fade the winners, right, and hold on to losers, which is what most of the people do because of something that we know exactly as loss aversion bias. I hope it does make sense. So we've seen this local rotation to the downside and a beautiful technical pullback. It's just sweet the way it looks. It's incredible. And forming this tiny little bit of a double bottom pattern right exactly at the support of 200-day moving average, which often could be considered this arbitrary fair price level, because otherwise it does represent the long-term trend, which is not an accident. It's not some sort of like a coincidence that is just there at this point. It's a 200 days data. So when we talk about long series of data and take an average of that, it is pretty often a good estimate of true value, a good estimate of expectations, right? So those prices will often gravitate towards those levels. Those people love those anchors, love to frame their minds at specific levels at around this time at around 39.50. That's where we've seen the significant push up, significant nice local bullish engulfing candle, right, which was basically following this series of lows, declining price action, and very brilliant strong pullback to the upside and one day so-called bullish engulfing pattern, right, and a significant breakaway pattern, breakaway gap, and a strong move up, which is likely going to head towards more aggressive regions. I definitely need to visit my barber. My beard is literally itching like crazy. Whenever I don't visit the barber, my great amazing barber, I you know having and growing a beard is definitely not an easy task. The bearded guys will probably know what I'm saying. So Shema Mega Kras. Hi everyone. Hi from Netherlands, as to Netherlands as well. Thank you so much. It just itches and it irritates at times. It's crazy not to hold on when I'm talking and not shutting up for like 30 minutes for you delivering this alpha content, hopefully. So if we go ahead and move on, right, we are talking about this potential candidate for the XLE, which represents this energy market for the S&P 500 sector, with this some sort of like a pattern resembling double top, right? Double top is typically a bearish pattern. We're not really looking this follow through to the downside as confirmation, which is why I would be very, very cautious and trading as if it was a confirmed double top, right? It's not confirmed. It's resisted to go kind of like below the breakdown level of 81, which was fully aligned with this directional support by the 200-day moving average, which again is a fair measure of fair value and average price at 81. You can tell that overall, there's been this significant slowdown overall, right, over the past 6 months, maybe even a year. Basically, because before that, ever since the COVID lows, we were looking at a significant, massive push, continued trend up, basically pushing us from the levels of 25 or even 20 all the way to 95. So it's an incredible rally in just over 2 years for the energy sectors, and which is exactly what you're looking at or even experiencing very sadly, right? As money is leaving your pockets and you have nothing to do about that. Money is leaving your pockets because you spend more money on energy. Many businesses are closing down, right? Still because of high energy costs. So as long as those high energy prices remain at those high levels and refuse to break down, well, there is this assumption that even though the trend has slowed down, I would argue that this overall primary trend regime is lifting up, is upsloping. And there's this wise saying, some of you may have listened to my keynote in London in blockchain economy. And so that trend is your friend. You do not want to fade the trend that just continues to persist, right? Because you have pretty low odds of catching the top or just catching the bottom, right? Those odds are very low. Once in a million, maybe you'll catch it. However, in order to get to a million, you'll have to have 900,099 attempts that will fail. So we have so many chances to get wrong about that and lose money, which is why you do not fade the trends, right? Because otherwise, why would you be the only person in the planet full of 8 billion people or so to get it right, right? It's very difficult. 1 in a billion, like 1 in 8 billion. What are the odds? Those are not good odds, if you ask me. So overall, we have this almost confirmed double top pattern. However, until it gets confirmed, it may well serve as a mean reverting kind of like a move range pattern, a rectangle. That is just another instance and rendition of upwards continuation. An early signal that we could have and then have a little bit of a preceding warning indication that the trend will weaken and that a trend will actually break down is observing this relative strength, which is basically price security of the XLE divided by the S&P 500. And by doing so, we can tell about this relative strength ratio and the directions, because just like we had in the past, well, those relative strength trend breakouts often precede significant market rotations, right? So just have a look at this local breakout that we had up here on the relative strength, similar pattern, similar contracting pattern up here, right? With the underlying symmetrical triangle, that we had definitely, well, for quite a long time. I would argue that by just looking at those areas, right, at those areas, we can easily tell that they have predictive power, they have forecasting power, right? Just have a look at the breakout at the relative strength and where the actual prices were, right? So before the actual breakout on the prices came in, it aligned with the market bottom. It did align with the market bottom at that time, right below the 200-day average. Basically, the low trough on the lower boundary of the symmetrical triangle, right? So I would argue that just what's relevant is that it does bring predictive power, maybe source of some preceding signals, and just the way it would broke out to the upside, this early spark, this early indication, you would have literally bought the bottom of the symmetrical triangle, right, and earned pretty significant profits of like 50% or so in a matter of 2 months or 3 months. So one way or another, tracking those relative strength studies, which is also what I mentioned at the final bar with Dave Keller, is letting yourself land at certain environment, right? Understand the market environment, and by understanding the market environment, I mean looking at the odds of the risk on, risk off, and this is exactly what we're looking at with the relative strength study per the XLY versus XLP, right? When we divide the security, one security prices by another, right, XLY versus XLP, we all have this relative strength ratio. And by observing this trend, this 200-day trend, it tells me that for the entirety of 2022, it had been in the bearish trend, in the bearish decline, right, in the bearish slope, which was certainly indicative of relative weakness, right? When there is weakness, when the relative strength ratio declines, it means that the consumer staples, the defensive sector, the defensive sector, which often outperforms during the bear markets, takes the leadership, right? And otherwise, whenever we see this significant market shift, this rotation from, let's say, 170 during the start of the year towards 214 or to even above 14, this is a significant signal from the market because it also crosses over to 200-day trend. So each and every single breakout above 200-day trend can be source of again, valuable information, right? Because what it tells you is when you have this moving average crossing, right? When you have certain slope over the moving average, and this price action just continues to kind of like move along it, and once in a while you get this significant, powerful break to the upside, eventually there is persistent. This tells you that the price has exceeded well the average long-term values, right? So this is a credible change, credible shift, credible warning signal that something has changed, inside of the market, right? Which is exactly what technical analysis helps us track. I hope it does make sense so far. Please let me know, guys, if it makes sense. Siren is saying best beard in crypto. I really wish, mate. I really wish I were as good looking as you are, right? Handsome gentleman. So many great people I literally met in London. It's incredible. And Siren is definitely extremely a positive person. And I appreciate all the positivity, right? Not so much because I, well, cherish those people, I of course do so. However, being positive in life, being positive in comments, just saying something nice, smiling to the people, that's definitely change the world around you, right? You can just do something as simple as smile to the next person, thank them, just say something nice, be kind, and you're going to immediately see that the market just the life, and eventually the market, will turn around and turn it in favors. That's definitely something that I live by. That's definitely something that I prefer to spread as well myself. So, having a look at the local range situation, right? Bitcoin has, like I said, significantly broken to the upside, exactly the way it was framed within this example, right? The significant shift, the trend has shifted, the direction has shifted, and started slightly upsloping. And even though it's not kind of like, immediate 500x rally, it takes it slow because the early stages of the bull markets are fairly slow, right? You typically get this low interest accumulation phase, then it kind of like just expands very fast, and you finally have this vertical brawl of top when there is this financial distress or something, right? Big money leaving the market, right at the moment that the biggest popularity of it is, and then kind of just continues to crash down, right, and just bounces back. However, those bounces are way weaker than any sort of like a persisting trend to the downside. And those moving averages, they're going to continue to slowly kind of like lag and track those levels, and that's exactly what we're looking at. We are somewhere over here for Bitcoin, right? So I would suggest that, of course, it's a significant breakout to the downside. Locally, it's broken this local pattern, local consolidation that we're going to have a bit more detailed look in a second. However, it still remains in a significant range of prices between 21,500 and 25,000, right? So there's no significant bearish breakdown. And in fact, we are talking about still confirmed pattern, confirmed breakout that validates Bitcoin's bullishness for the next months, for the next years. And by that, I mean that, well, we have 84 years of data to prove that the pre-election years are winning, that the pre-election years are very heavily skewed to the upside, because no politician in the world would ever risk going into elections with having disrupted and broken the economy and broken the markets, right? The politicians will do every single thing to get reelected, and it also includes pumping the market. So eventually the situation of lowering of the interest rates is on the horizon, right? And even though, of course, the FOMC committee, the FOMC board members are still holding a couple of conferences to announce the rate hikes, even so, we're talking about this very strong positive seasonal pattern for the pre-election years, 84 years of data, and just one loser every 4 year 84 years, right? And every 4 years is an next presidential cycle. 84 years of data ever since 1939, and we're talking about one single loser, just one loser out of 84 years. That is significant, right? It's just almost as if you were to track the temperature changes, the temperature records for your country. Imagine it's 20-30%, 30 Celsius during the summertime, and you have 84 years to back it up, or 200 years to back up that the average temperature during summer is 30 degrees. And all of a sudden, you want to forget everything that happened over the past 200 years and assume it has completely no memory and no connection, and it's fully randomized, and it's fully random, that it has no connection. And then on one day, it may be 30 degrees, and on another day, it may be minus 50, right? So betting against the odds of 84 years data that tells you that the pre-election years are bullish is like betting on negative temperatures in the summer. Isn't it right? It's exactly the same, right? So it's once in a while, maybe, you'll be lucky and you face this ice age back again, coming up overnight. You never know. Maybe there is this strange environment happening, dinosaurs come back again to life. You never know. And once in millions or billions of times, you'll be right. However, is it really a good bet to keep believing or keep, just counting on those significant trend reversals just for the sake of it, right? Just to prove you're right. So we're talking about this confirmed breakout in the direction of the bull market, right? Significant breakout of a threshold of $20,000 fully backed by the 200-day moving average, which right now works as a fair average support. We're still talking about this significant push over 65%, right? Low to high from 15,500s all the way almost to $25,000, depending on the exchanges. It's somewhere around 65%. Very significant push, right? Whenever there's the credibility of the breakout just comes to be tested. We're often talking about those fake breakouts when the market moves in sideways, right? You often see those kind of like levels just slightly tilting above it, slightly below, just kind of like just comes back and tricks everyone, just goes slightly bit higher and then fades back again inside to the pattern. When it finally rips and 65% move up, is this really an accident, right? Is this coincidental? I would say no. So 65% of a move up, low to high, is a matter and a measure of the trend persistence much more than randomness, I would argue, right? There is this persistence of higher highs and higher lows all the time. And even though we're looking at these local declines, during the Asia session over the last night, overnight Bitcoin just slashed, within hourly signal by 5%, then even though it happened, it still does not disrupt and change the fact that we're talking about very confirmed pattern breakout, right? And if I were to look at the chart, this is exactly the same pattern that we had seen which had preceded each and every single bull market breakout, right? The dotted curves, the vertical lines tell you about the date of the halving, and halving had historically been always the driver for the next bull market, right? Because it increases the mining difficulty, it reduces the block rewards for the miners, so it builds this digital scarcity, right, within this logarithm distribution. So it builds this scarcity, and typically when there is less of it, you want to have it more, basically, right? So it drives up the prices. It drives up the prices fundamentally, and also serves as significant anchor for many traders and investors who believe that on a self-fulfilling basis, just because it happened in the past, this representativeness bias will kick in, and traders will assume that, okay, the saliency proves that we're going to repeat the same pattern. So combination of an infusion of fundamental triggers, reasons, and technical triggers may well prove again the same pattern to repeat itself, right? And be a source or a starter of a next infant phase for something that may be just a new bull market, whatever the targets are, right? So of course it's a little bit of speculation. We don't know what's going to happen in the future. Maybe regulators will step in and disrupt everything that we know about crypto. You don't know that. However, this is not the job of technical analysis. Job of technical analysis is not to predict the future, is not to give you a crystal ball. In fact, it is only to help you protect yourself against the risk, so that if you have those 84 years of data and only one losing year, so that you don't go and make this brain dead mistake to just go counter it, right? Otherwise, the January barometer is a very interesting pattern, seasonal pattern that just with 83.3% accuracy ratio over 72 years, ever since 1950, has proven right that as January goes, so goes the year. And ever since January started, we are looking at this massive market rotation. Like I said, see, come back again. Market rotation, January. Risk on aggressive market sentiment just stepped in. Significant bullish close of January, right? Opening here, closing here. Same way for stocks, right? For S&P 500, 23 lows, boom, 4,200 almost, right? So it's with 83% of chances, we're looking not only we're looking at another independent confluent signal that 83.3% of chances that over the last 72 years, not 5 days, not 5 hours, 72 years, that's 3 times as long as I live almost, or 2 times, whatever. You cannot argue with those odds. Basically, as January goes, so goes the year, and this has proven 83% accuracy, right? So we have 70% of being right if you trade against that. This is not a good odd, right? Unless you're a gambler, unless you are, there is nothing wrong with gambling, by the way, unless you are a specified extreme gambler, risk-seeking person, and you want to get those odds that even if you lose, 83% of the time by betting against, then you could go for it, right? To me, it's not a fair game, but so many other people could maybe find that interesting. Tell me if it makes sense to put everything this way in the right context, right? Because we are talking about, well, will Bitcoin continue or will it drop further, right? So just back at the chart, we're talking about the strong seasonal pattern that until every halving happened, right? We have already seen this massive inclines, massive pushes every single time, right? And so there's no reason for us to believe that it's going to be different this time, right? If this pattern is consistent, if it repeats, and there's this full alignment for a bullish year for entirety of 2023, backed by 84 years of data, backed by 72 years of data from the January barometer, which closed bullish, then I would argue we will have probably good odds of seeing Bitcoin climb up somewhere, nicely towards like 40, maybe $50,000, maybe just back up slightly a little bit towards the halving, which often comes down and lands somewhere around 60% from the lows, right at the moment of halving, which is something to note. Again, maybe it's an accident, maybe there is some substance to it, right? Every single halving lands somewhere below at 60% measured from the previous highs. So just maybe we will land, go higher and land somewhere, or go, somewhere towards like 40, 50,000, just land somewhere around back 30, which is representative for this 60% drawdown. You never know. Of course, this is a little bit of just forecasting, and maybe very wrong about that. Just don't trade of it, please. Otherwise, just having this local distribution, right? We're talking about this Barbicator Pro signal that high time from trailer basically broke down, right? This local breakdown made me basically get back in cash with a loss, right? I got the can I recall 30 2.5% loss on account, which was slightly a little bit better. A little bit worse than I assumed, right? Because of my poor execution. It happens like that. There's this slippage, there's this timing issue as well that often just changes the risk there. However, what we're looking at from this perspective, or even from this perspective, there is a little bit of a pullback, just a little bit of a pullback. Like I said, the breakout attempts rarely ever happen or executed in the first attempt, right? The breakouts often, when there is this price barrier, it often kind of like feels this opposing force, this pressure, as people falling for this loss aversion bias, cutting the winners instead of holding on to the winners. And as a result, this self-fulfilling effect just pushes the prices lower, pulls the prices lower, right? It may happen. And this is exactly what happened here. And this is exactly what will happen many times in the past. That's why support and resistance levels work. Regardless, the trend shift is persistent. It continues to move up on a 200-day baseline basis. That is a source, a moving average, hybrid average of the Barbicator Pro. First breakout attempt, which has failed. However, in this overall uplifting regime, the resistances are supposed to be broken and supports are supposed to be held. So eventually, we have this technical breakout objective at around $35,000, and so closer target for 28,500 and 30,000, which used to serve as significant bounce area in June lows 2021, and 30,000 is besides a significant psychological level. Psychological because people love those round numbers. Like I said, we love those round numbers. They are easy to remember. We are framing our minds very easily there. It's an easy guess, right? It's an easy guess. It's so much easier to remember $30,000 3 and 4 zeros instead of 31572.57 if you argue, right? So the pi number, you remember that it's 314, and not necessarily that it's 314 and so many other other digits right after that, right? I don't even remember that. So just back in the charts, like I said, these local targets that we eventually, in my opinion, have reached, right? Knowing this bullish context for the entirety of the year, and the fact that the economy is still kind of like facing this recession. However, the business cycle lags 6 to 9 months behind the financial cycle. So the financial cycle has bottomed, right? This market rotation has come through and is a fact. So the trend has shifted. So if you are trading this shifted trend just the way you did trade the entire bear market, it is mainly because of cognitive dissonance, right? It's mainly because of you fight this belief, you have this cognitive dissonance, which tells you basically that your new information doesn't fit in your old frames of the bear market. As a result, you feel discomfort, the mental discomfort, and you try to minimize the weight or the weight of this news, and you undervalue it, underprice it, and undermine it, or just simply ignore that, right? Some people are stuck in the bear market. This is cognitive dissonance bias. This is a source of many mistakes and faulty reasoning, right? We don't really want to get stuck in the bear market when the new bull market emerges. And otherwise, we're looking at local decrease, right? So speaking about short-term trend continuation, the trend has this local trend breakout is strong, is significant, right? It broke above the average volatility levels defined by the Berbicator Pro. So it's a persistent move to the downside locally, right? So arguably again, this is probably a little bit of more downside oriented price action in the next couple of days, maybe a little bit of pullback. It often pulls back to the pre-breaker levels. So $23,000 is a nice spot, perhaps to anticipate a little bit of a local rejection if it's really continued to continue lower. However, what it tells me right now, this significant move down, this breakout day came in to the downside, with significant odds of continuation, right? So I would argue that for the next couple of days, we may see some further continuation. Like I say, there is a lot of reason to believe that we may just, perhaps touch a little bit of this lower frame. We are looking at this fake false breakout, this overthrown top, the highs of the pattern, the lows of the range. Just maybe there is this significant pull lower, maybe it will catch the lows and then rally back higher. I don't know what happens. However, we do have to be prepared because the odds for the short-term bears are winning. The short-term bears confirm the breakout, and unless there is some significant shift and kind of like a reason for the market to go up, it may just slide lower, right? And even if it does so towards 21,500, even if it does so towards what it was the support, there we go, around $2,600, $20,600. Just maybe it will prove, just maybe it will prove arguably that it's going to be proven a support, just the way it was working as a resistance. We'll see about that. Ethereum is holding up even better, right? I would argue it's still kind of like facing locally better. However, it's not retraced fully, just like Bitcoin did to the bear market rally highs of August 2022. Right, it's moving in its own sweet local spot of a range pattern consolidation with just a little bit of a volatility pickup increase, just like we are looking at the bottom of the screen right here, right? An average volatility and a little bit of an uptick. We'll see about that, how it continues. However, what's relevant is that it didn't really broke down. It didn't just slash or annihilate, annihilate this whole bullishness. It just locally kind of like provided this nice sweet retracement after some ridiculous rally, right? So assuming that a trend will go up in one line is with no stopping, with no pit stop, is a little bit of a bad bet, if you ask me from my experience. Then going finally to summarize, I actually put it up there. Oh, by the way, congratulations! We're distributing the first iPhone 14 giveaway winner. There is a winner with the defined by our randomly selected and the reward the price, the iPhone 14, brand new iPhone 14 worth $799, almost $800, is going to land to the person with the UID 53629677. And I have no idea who this person is. However, congratulations, and definitely expect Bybit team, our partners, to get back to you. And speaking of bullish seasonal or of the seasonal pattern for Bitcoin, right? What I wanted to show is that over 12 years of study, the March period is fairly neutral or negative, right? The odds are of 16% annualized return and only 41% of winning trades, which means that 60% of trades are lost on average over the last 12 years. And you can tell that most of the cumulative profit and the pattern returns come from the heavily skewed outlier of 2013, this persistent strong market move that just basically gave you this significant push for over almost 200%, 175%. So it looks in 2013, right? This is the significant shift in the cumulative profit. However, most of the time, March proves declining tendency, right? Just over the last 11 years, if you look back It's a fairly losing deal. So arguably, it's not necessarily the best odd to be extremely crazy bullish about March. Typically, it's a fairly neutral or bearish month, right? As opposed to a very sweet spot of April and May through mid June, which tends to be some extremely elevating and uplifting period. So I would argue that if the odds are of any historical lesson, perhaps they will prove right this time, perhaps they will prove wrong. You don't know. What matters is that if you follow this pattern over the last 12 years, you've made almost 900% annualized return with 66% of chances, almost 70% of chances, and an average return of 53% or almost 54%. How cool is that, right? So based on the historical patterns, it's way better not to ignore them and just maybe hold yourself back a little bit without too much exposure in March and just maybe waiting for April, May to kick in for good. Hope it does make sense. Thank you so much. Legends, everyone, listen, you're doing a great job for being here on the show for so long. I know I rumbled a little bit. I scratched my beard. I definitely need to visit my barber. Thank you for all the kind words. It's pretty extraordinary that you guys are here. Congratulations, because you did survive the bear market, right? You did survive very, very difficult Black Swan events last year. And by yourselves being here, you're basically early pioneers into a new bull market, right? We're in an early stage of a new bull market, the way that the charts tell us. Charts do not know the future, however, they know the past, and they can help you observe those market rotations. And the charts are telling very, very clearly the market has shifted to the upside. The new bull market has started. However, it's in its early infant stage, so give yourself time to observe it, to rally along with the trend, to follow the trend that is just getting started. And before we go, this is to remind you guys that in 2 weeks, in under 2 weeks, in somewhere about over 10 days, you're going to experience something really, really cool. We're launching, myself and my team, we have been working like crazy for the past weeks and months to get and deliver this incredible thing that is coming up for you in the next 2 weeks, right? So just the way it says, exactly 4 years ago, Bitcoin was at $4,000. I remember that very well. Do you remember that? After a year-long bear market and right before it pulled off 3.5x. The 2023 odds seem even more promising, just like I said. The seasonal patterns are very heavily skewed to the upside, and after the FTX crash, many people lost trading confidence. However, if you wait patiently for the next 10 days, next 2 weeks, you're going to be able to build back your confidence, because I'm going to get you some freshly, brightfully, beautifully released tools that are going to help you do so. First of all, to cut your losses, you're going to be able to learn how to stop losing once for life. The risk management techniques, all the high quality materials that I myself, as a chart and market technician, the only accredited technical analyst from my home country, have gathered over the years. And very, very soon we are launching something cool, and you're going to have opportunity, this excellent chance to stop winning, to stop losing, to start winning, to build back your trading confidence. Because definitely I know how it feels. I know how it feels to get wrecked. I blew up a couple of accounts myself, lost heavily hundreds of thousands of dollars easily, like it's nothing. I've been there and done that. So I'm sending the elevator down to you, and in 2 weeks I'm setting something special, releasing something really, really cool, and you're going to love it. And it also helps if you believe. That's all for now that I've got for you. Make sure you stay tuned, everyone, because we've got something really, really cool hitting up for you. God bless you all. Congratulations for surviving the bear market again. You're doing a great job. Keep it up, and I see you at the Burp Nest. Make sure you hit the subscribe button, smash the likes, blah, blah, blah. Do all this stuff on YouTube that you always do. Comment if you have any questions so that I can come back myself with my team and answer some of those. If not all of those, I would definitely prioritize the ones that are kind and positive for the set reasons. Maybe because we don't want to feed the trolls, and we also want to utilize our time to help you who want to learn. God bless you all. See you around. Have a beautiful Friday and weekend.